Hey, hello friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we try to understand from the technical charts what happened in the market during the previous week and then learn something from it and plan for a better trade for the upcoming week that's starting from tomorrow, April 15th, Monday 2024. We'll come to the wrap-up. For that, we'll see some charts. This is the weekly charts that we are seeing. As it was seen in the last several weeks, it was the Nifty on the left side, Banknifty on the right side. Weekly charts, cup and handle, flag breakout, flag breakout, flag breakout. Same. In the Banknifty, with a little more volatility. That's all. Right? Yeah, you can clearly see the flag breakouts and price at the top of the right channel. While price was trying to move above in the trendline channel in the case of Banknifty. You can see the cup and handle and the multiple breakouts in there. So this is also a weekly view on Nifty and the Banknifty. This is a daily view. We can see that market had been skyrocketing. It has been doing a higher, low bullish move since quite some time. You can evidently see that interim retracements had happened, but very small. Banknifty in the case, while it was moving up, it took some time to break the all-time high. It was the retracements were bigger as compared to Nifty, and also it was very volatile in this way up to the all-time highs. But we could see from the weekly charts that both the indices have hit the all-time highs, with Banknifty in fact cracking the 49,000 big rounding number, and also Nifty went as close as 200 points away from the 23 big rounding number. So and if you look at the weekly candlestick, you can clearly see it's an inverted hammer on the Nifty and a dodgy, indecisive dodgy, almost like a gravestone, bearish in nature. So that's clearly big size of that. Two candles in weekly on both indices indicate the selling zone, the resistance zone that's formed at 22,800 and 49,000 on the indices respectively. So inverted hammer at the top of a rally could mean reversal of the ongoing trend. That means it could further move down. Possibilities there, but it's confirmed only if the price moves below the candle's low. Same with Banknifty also. If the price moves below this candle's low, then there is a possibility for the retracement to happen. Regardless, the kind of pattern that's formed is indecisive because of the small body and large wick size. So there is a pause. There is a possibility of a continuation of reversal as well. Daily charts of the Nifty and the Banknifty, if you see, you can clearly see that it's an inverted V shape. So a truncated week of 24 days. So it moved up, then met with resistance. The remaining of the days it moved down. So an inverted V shape, and in fact has come down to a zone of support, and there is a possibility of a spike up from here, which is change in polarity where the previous resistance zone acts as a support zone. That's there in the Banknifty also, because it has made an inverted move, and then on the daily charts it sees that it has posted as support zone where change in polarity bounce is possible. But the candlesticks are bearish on Friday, which long wide range bearish candle formed in Nifty, while inverted hammer with long wick size selling pressure indicative is there on the Banknifty. So keep in mind that we just retraced hardly few 100 points from the all-time high. We're still there, very close by the all-time high. It's natural profit booking probably, or it could be indicative of Nifty needing to further retrace more before it gets the energy for the next leg. Bollinger Bands on the daily is what you see there on the Nifty, the Banknifty. It is still expanding on the upside, indicating that more pulls could be possible, but it has fallen from the walking on the bands pattern on the Bollinger Bands. So it gives a pause. It may be heading towards the 20 moving average, which is the median of the Bollinger Bands. Banknifty also expanding on the upside, which indicates more falls are possible, but it has fallen off from the top of the band. The blocking on the band's concept is negated when it falls down from that, and there is a possibility you can get attracted towards the median or the 20 moving average of the Bollinger Band. So otherwise, the expansion continues on both indices and indicates that more moves possible still. Before getting into support resistance zones, let's go quickly and wrap it up. So it was all-time high week once again, another all-time high week, and it had been making all-time highs since several weeks. Right? If you look at this candle, you can see all-time highs were being made for it's 4 consecutive weeks of all-time highs, and Banknifty also had been making all-time highs since 4 weeks or more. So this week was not different, but this week it met with the resistance and reversed, and so far the retracement had only been, the biggest retracement has only been 4.5% this entire bull rally, and it closed flattish positive, just 5 points up, so absolute flash, but still maintaining the weekly expansion moving average 20 supports below it. So this 35% rally that we're talking about is just hardly 4.5 retracement has happened overall in this entire rally, with multiple cup and handles and multiple flag patterns, and from the cup and down pattern that we already see. Banknifty also, after taking a longer time as compared to the Nifty, had made all-time highs, but it met resistance at 49,000, very close by, hardly 400 points could it move, and it met with 49,000 resistance. In fact, it breached the 49,000, but plan is to close flat this week, another flat, just 70 points up, and it caused indecisive candles. It is, in fact, both of them are indecisive on the weekly. So medium term is it's a pause, it's in the same as that we can make out. So entire daily charts, if you see, it was an inverted V shape in F4, truncated, and it was bearish closing, like 234 points lost and 422 points lost on Banknifty. Well, 234 points on Nifty, right, and 422 on the Banknifty. So there also you have the bearishness all along. Last week, the weekly and the daily charts are bearish in nature, indicating some selling pressure or profit booking at the top. But still, you can say it's daily charts is again that it will try to make all-time highs and going back to the same place we'll try to break out. So it's that way it kind of a support zone. So next leg, the question is whether this retracement may extend further, or would it pause here and then continue rally? That's the question. If it is going to extend, how far it's going to extend? Right? Is it waiting for a lot of events aligned up ahead, like the quarterly results will start coming in now from next week. Fed rate cuts news could come in next month. Election outcomes could also come in from next month end. So there's a lot of volatility, a lot of events that's lined up. So market could take some sweet time to retrace and to have healthy corrections and all that, prior to heading towards big rounding numbers that's there at 50,000 and 23,000 or 24,000 levels, right? So that way the question is this going to retrace further or correct itself further or not? Bollinger Bands clearly showing bullish biased upside movements, by the upside expansion on the bands in the short term. So that has not changed, or that is not having a bearish pair or expansion on the downside yet, right? So it is just a short-term pullback that has happened in both indices as of Friday. So next week we'll tell whether that's going to continue, that's going to an active retracement further or not. I'll wait for that. So let's look at the support resistance levels down there. Obviously 22,775 and 22,800 full rounding numbers is going to be the first hurdle for the Nifty to take out from the upside, and after that another 200 points towards the 23,000 big rounding number. So resistance will obviously be there. That will make it to the top of the channel, outside channel, and the downside the supports could first appear at this 22,500 where it is right now. That's a support zone. If that is breached, it goes to 22,378. It's 20 exponential moving average, and breach of that could take it to 22,100, which is what the 50 exponential moving average, and very close by had 22,000 of big rounding number support again. A breach of that could take you to low of that previous swing lows can extend to at least to 22,600 kind of levels, right? Then close by have 21,600, which is called the 100 exponential moving average as well. That was the Nifty. And the Banknifty, if you see, the first hurdle will be to take out this 49,000, which it had breached but could not manage to conquer it. And then 50,000 downlink number, and all the intra downlink numbers would act as resistance on the upside. Downside, the major support could come in at 48,200 from where the breakout happened, right? And if that is breached, a gap is there close by at 47,700, which also has a 20 expression moving average also. So 47,700 to 47,675 is going to be a good support zone. A breach of that you could take it to the 20 Fibonacci exploration levels, also is coming close by at 47,100. So 47,600 also has this Fibonacci extension. What I mean, so 47,600 to 47,700, that zone, if that is breached, then only we need to worry further as to if it can go to 47,100 with 50 extension moving averages there, and 47,000 big rounding below that. The 100 exponential moving average comes at 46,500 zones. So that's the levels of support and downside for the next week that you can see. Right? Having seen all that, let's move ahead and see the momentum and the trend indicators. What do they say? If RSI and the ADX for the trend on both the indices on both time frames. Left side we have the weekly time frames for the Nifty and the Banknifty. You can clearly see that the bullishness is maintained on the medium term. Bearishness has taken a slight slip in the bear zone, in the sideways zones, not bear zones, from the bull zones. In the case of Nifty, short term only. But overall, momentum dip has happened, that's for sure. But nothing much is confirmed to have happened unless it continues for the next week. So momentum managed to be in bullishness more or less, except for the short-term momentum significantly slightly slipped. But trend indicator also nothing has happened. It's all remaining in the bullish, but the strength of that has weakened in the case of short-term in the Nifty, and that's all. And in the medium term also slightly it's falling in trend strength. So Nifty, there's some slight strength of the trend as it lose, but otherwise trend has not reversed. It's bullish. Momentum also, except for the short term momentum, just slightly slipping RSI 60 below into the sideways zone. Except that, otherwise everything is still bullish. Nothing much can be read out from these two indicators as of now, except that it just managed to hold on there. We're trying to understand the volatility again with India Wix. We can see that India Wix has spiked up slightly, but just 2%. Obviously, the market has moved down, so it's spiked up. But the fact is that it's a lower volatility, reaching 11.5. In that volatility and realized volatility, different spread is not that great. It's 8%, not much in favor of the option sellers. The IV percentile also is near to 40, so not that great, right? So option sellers. So all interest analysis, if you see it's long unwinding on the futures on Friday. Not great, it's indicating of bearishness. And April 16th is where the Banknifty is there, since there's a truncated week coming next week also on 17th. So 18th is where the expiry is on Thursday. Put call ratio is not great, 0.70 is not bullish enough. That's 0.70 PCR on both indices, so it's not bullish enough. And it's long unwinding with small bearish bias. Is what is indicative of the futures line. So overall, that's what it says. Let's look at where the levels are standing. So Nifty, the highest put writing is happening at 22,200 as of now, versus is at 22,700. Well, the second highest put writing is in at 20,000, and the second highest resistance is in at 23,000 far away. Nifty 48,500 and 49,000, very narrow ranges where the highest put and call writing is seen. Second highest put and writing is at 48,000 and 50,500, very wide range. So Nifty, the tight range bet is taken by the option writers. By Nifty, right out literally, but in the sense final points of range is taken by the option writers. That's what you see there. These resistance are dominating both the dices, can be clearly seen. Supports there, but yeah, resistances are projecting outside on the graphs if you see. Next is the study of the sectoral indices, the major ones, 6 or 7. So here we see that last week what moved up was metal, auto, and reality. These 3 sectors moved up, and what went down was IT and pharma and FMCG. What got hit really bad was pharma, which lost 2%. And overall, if you see the metal, auto, and reality, metal, auto, and reality, the 3 sectors were bullish bets can still be taken, while IT, pharma, and FMCG are struggling sideways and trying to catch up to move to the bull zone. So it's a mixed bag, right? That's what you see. That can be seen on the sectoral indices. On the left side, you have the IT sector. It's having a cup and handle move. Momentum has slipped in sideways for the medium term. Trend also slightly close all the negative zones. Metal is an all-time highs, breaking out, just taking a support and bounce up quickly. Metal is cyclic sector. All of the metal, including the gold and silver, is all moving up. Auto is on the peak, well, be careful, but it's bullishness all over seen on the trend and momentum indicators. Pharma is, of course, consolidating and trying to break on, but seems to have quite a hit back, but bullish momentum is intact on the medium term. FMCG has been consolidating after having retraced from the top of the channel and is having a sideways move on the medium term basis. Reality sector was is once again trying to break out of the trendline channel. It was consolidating for quite some time, but still momentum is remaining bullishness on the medium term, with the trend also bullish. That's what the sectors are showing. So industrial heavyweights that contribute maximum to indices. If you see, HDFC Bank was trying to move up towards top of the channel. Last week was a pullback. A wide range bearish candle is formed, with momentum still not able to climb above the bull zones, and trend also kind of weakened trends on this. But you see the Reliance industry is bullish, it is consolidating, and at the very top, momentum also bullish. Absolutely no problem there. HDFC Bank also bullish momentum. Always page to move up to the trend line channel, and then trend also is bullish. Infosys, if you see, you can see that it was trying to break out of the channel, but fell, got hit by resistance and then falling sideways, and then it's trying to consolidate there. EZS also is consolidating after trying to break out of the channel flag pattern and all that, and then after having fallen the sideways, it's trying to climb back in the bull zones, as you see. Like Bank has usually has been sideways for a while. ITC had retraced, tried to move up, some resistance there, hanging on the sideways. So it's more or less sideways in all 4 of these, the IT stocks, NTCS, the Kodak Bank, and the ITC, while HDFC also is sideways. So it's only Reliance and ICICI that's in the bull zones in the medium term, if you see. Otherwise, sideways is what you see on the heavyweight stock that contribute maximum to indices, right? 7 out of the 7 heavyweights is what you see. So if you see the mid cap index and the small cap index, we can see that there was a pullback, but it had the indices had climbed back to where it was, and then still at very close to the all-time highs. A good recovery happened in the last several weeks, despite the fact that the SEBI decision on some restrictions did take some of the profits and then moved back, but quickly it came back. That means the money is flowing back then. So at the all-time highs, very close to the all-time highs is where it is, with bullish momentum at the trend is where mid-cap and small-cap indices are there. When we're trying to understand the foreign institutions and domestic institutions participation, you can see that what was equally sold by Fyers have been bought by DIs. So DIs are holding the market. The mutual fund money is flowing in, otherwise the market would have crashed. Fyers is not participating and becoming big sellers. 8,000 crores was sold on Friday alone, which giving a false indication of 2,000 crores by 3,000 crores by just the previous day on Expand. So that's kind of more supportive FII participation that's happening, and some FII policy related. If restrictions from the Mauritius something had come, that may be a reason for the 8,000 crores selling that happened on Friday. Otherwise, the longs on the derivatives have moved up last week. It was a truncated week from the FIDA side. Right? We can see that there is indecisiveness in the futures and the options, on the derivative side from the institutions, while FPIs are having mild bearishness on options and futures. So it's a retailers which is mildly bullish and medium bullish and strong bullish on the futures and the options respectively. It's the retail traders. The Fyers kind of industries or bearish on the derivative side is what you can see as per the Friday's data. Moving ahead, we have a lot of interesting things happening in the global market. The first thing is the war situation is kind of escalating. Looks like with possibility of Iran also getting in this war, making situations worse, and oil boarding economy like ours. Other countries also, however, there's war, we have trouble in supply chains and many other factors. So, a lot of things are happening in the global markets. In addition to that, fundamental things that's happening there, the global US markets are also kind of having something to analyze, and commodities especially, and the oil. The commodities, does gold and oil, and the currency cycle. So let's begin with the currencies. The dollar is spiking up. It's nearly 2%, 1.61% spiking that happened. So it's almost nearly 4% of what is happening for the previous low. You can see the charts here. It's a neckline. It is consolidating, trying to breach that, and then basically it's moving up. Dollar index is moving up. It's not like good news for emerging markets like ours from the economic point of view. No, and then therefore, although it's not directly coordinated, the rupee is also at the weakest points, 83.5, with a spike to 0.3%, but still it's been it's been managed by the central banks, and it's at 83 above since a very long time, be controlled. So rupee remains to be weak. It's not cooling down. The crude oil has cooled off just 1.5%. Remember, it has been spiking up for how much? It was some. It has been spiking up 27% or something from the previous swing low, and it is on the top of the trendline channel. And any spike to break out of that trendline channel, it may have relation with the global Hamas war that may be happening. So breakout from here will not be that great news for oil importing company like ours. Although oil marketing companies will make some benefit. And look at the gold. It has moved just 0.5%. But with the candle, it made all-time highs. This graph is wrong. All-time highs were made much above the 20. This was last week's market at the all-time highs. It broke out and then it gave up some profit booking, but gold is at very close to the all-time highs with bullish momentum and the trend. Huge money shift is happening from equities and bonds and other markets to safer havens like gold. So the fact is, the equity market is also not retraced too much, and it's also very peak. And safer haven markets like bond and gold and all that is also at the peak. So either of that has to fall down. So it's very crucial for the balance to be maintained. So it may happen. So probably the equity market will retrace when the gold is making all-time, or gold keeps on making all-time highs, and then the equity market may. Gold may retrace and fall down, while equity markets will continue to break out. So that kind of imbalance worries there. You have to keep in mind that. In addition, the US markets, which is also a bullish bear rally like ours, especially the Dow Jones, Nasdaq, the S&P 500. You can see the two weekly candles where the retracement has come in from 33,970 to 37,900. So nearly 1,000 points of cut has happened. So it's a decent retracement, but momentum has slipped into sideways, and trend has crossed out slightly on the Dow Jones at least. Nasdaq, it's not reflecting that. It looks like it's consolidating, but you can see that consolidation could turn up into retracement as well. So momentum is bullish. In S&P 500 also it's bullish, and but retracement the last 2 weeks has been seen. So this retracement is a possibility that can extend further. So that worry is always there, which could reflect in our markets also, because US market is the mother market, as I always say. So momentum has fallen to bullishness only in the Dow Jones. S&P 500 and Nasdaq is still meaning that. So momentum is there, but you have to be slightly cautious on that when So to just summarize, there are troubles. Global cues are not great. Oil is spiking up, oil is spiking up, gold is at all-time highs and breaking out. Used markets are showing red, and the possibility of retracement is there. This is not great news for all markets. Watch out on all of these. Having said all that, let's get into some actions for next week. Two stocks: Indian Railway and Catering, IRCTC. It seems like it's having a rounding pattern breakout possibility with tight stop losses. It can give a good risk reward of more than 2. Only thing you have to be worried about is the volumes and all the trade. You have to keep a watch as next week the volumes are rising. Usually the price is moving above this rounding pattern, volumes will come in. And there is a divergence of the weekly, not confirmed, but momentum is absolutely bullish and trend also is bullish. It's reason why this, because along with the pattern, it can easily give you low risk reward. Have tight stop losses, but IRCTC breaking out possibility. Out the industries looks like it's a chemical stock. It had broken out of this trend line channel and from bearishness to bullishness, and it formed a cup and handle pattern, and it is breaking out right now. It's bullish momentum and bullish trend. It could substantially go up as high as all-time highs of nearly 1,000 from the 750. Will be good risk trade, but I have tight stop losses at 2 candles low. Right, these are swing trades which cannot go beyond 2 weeks max. Right, they are positional trades. So 2 stock picks: IRCTC, Indian Railways Catering arm, and Aarti Industries chemical stock firm. Right, recent surprise patterns, momentum. By the way, Aarti Industries volumes are great as compared to IRCTC. Momentum and trend obviously is in the bull zones and rising up its strength. Aarti only volume is the only concern, otherwise patterns are great. 2 stock picks. Now the third one. This is another actionable payoff chart of the Nifty options weekly strategy. This is a double diagonal calendar spread, completely hedged on both sides. Where we are selling OTMs of call and put, and then taking hedge OTM call and puts buys for the upcoming week, not this week. So selling we take this week, and for buying we take the upcoming week. Reasonable risk reward if we come out before the expiry day. Today the expiry prior date expiry is Tuesday, so you'll have to get out in 1 or 2 days, and risk reward come in. Very good range at this level is coming. Price is not full. Could find some support at the 200 levels. This is what the option levels are indicating, 20 to 200. The price cannot go to 23,000 just like that, right? So, and because of the IV price possibility, if that comes in, it could turn out to be advantage itself. Although the estimated margin is where it has 50,000 for this trade. And you can increase your portion size as per capital risk appetite and all, capital size and all that. Right? Take as many number of double diagonal calendar split as per number of lot size as you want. But increase that as per appetite. That's what I meant. So this is completely risk defined, and get out if this price moves below this break-even point on either of the side, put or call. Right. The risk is more on the downside. So if the price breaches 200, get out of that. It will be the middle option, but you can also always roll down and roll up to adjust the opposite side of where the trending is happening, and then still continue to be in the game, because it's only 3 or 4 days because of the truncated week that we may be playing with this, right? So this is the options weekly double diagonal counter spread strategy for the next week trade as an action. Let's just wrap it up. So we had another new all-time high week, the 3rd or 4th week in indices, and this week was an inverted V-shape move where the market hit the all-time high and then reversed. Some of the gains of the price momentum trend and all that is given up, but market still made a steady expression moving average. Correction is now at 5%, just 4.5 to 8.5% retracement that has happened on the dice respectively after a cup and handle and multiple flag breakouts. So what goes in favor of the bulls is it's close to the bullish momentum of the trend. It's greater than weekly of 20 expression moving average, but demand still expanding upside. Close to the all-time highs on both indices, higher, low patterns there. Mid cap, small cap is also all-time high. Sectoral indices are all maintaining sideways bullishness, none of them bear zones yet. Most heavyweight stocks are also in sideways bullish zones, not in bear zones, and there is also in this long volatility regime. What was in favor of the bears? Fyers are not buying, this selling mode. Reversal price candlestick patterns are seen with inverted hammers, and then in the C, gravestone, doji, and all that is dangerous. crucial resistance zone because big rolling number is very close by. It cannot get taken out just like that. It needs some time, some consolidation, some retracements, all that can come in, obviously, as per historical charts. Bullish or futures wise, not seen. It's non-bullish. PCI on the options derivatives also non-bullish. US markets are red. Crude oil is rising up at the top of the channel. Gold is breaking out to all-time highs. These are all factors in favor of the bears. Now all-time highs have been hit, but it then reversed from there with the inverted shapes. Now big rollings are coming. Market. The question now is, will the reversal extend further down from what it is, or would it quickly recover and then make all-time highs once again, or would it take its own sweet time of consolidating or extending the correction? And if it's extending, how far it can correct? Is it waiting for the quarterly reversals that's coming from next week onwards, or Fed rate cuts that can come up next month, the election outcomes? Is it waiting for that, for the big breakout? That means it may retrace more. That means it may consolidate more. Right, these are the questions that we need to have fingers crossed and then watch out the market. That's all that can be done. But we can know about the probabilities of the resistance and supports there and play the game. That's all in our hands. Rest is managing the risk. So technically, market is mostly bullish itself. Although slight slip in the short term Nifty to the sideways has happened, but still it's bullish. So my bullishness in the market view with a slight neutral or sideways bias is what I have for the next week. The Russian fears, inflation, interest rates, and the ongoing war, all these things could scope your technical analysis, and then black swans will come in anytime. So manage your risk and hedge your portions always. 22,000, 23,000 is one of the wide range I have for the next week. 47,500 to 49,000, 2,000 point range that I have for the Banknifty for the next week. Right, levels to watch out for. If the market is maintaining the 22 and 48,000, next continuation of the rally, the next leg could come in very fast. Otherwise, it may take more time for it to do the bottom hit and then come back. It may take its own 3 times. So take all night risk, but with hedges only. Vertical spreads on all directional options, and this is how that will work. A lot of option strategies available in the playlist around that. Right? And every dip that happens in a bull market gives you opportunity to buy in quality stocks for investment in the long term, less IP mode. For traders, you have to wait for breakout if you're an option buy. Otherwise, go for non-directional option selling, but with risk managed in the portion size very carefully. That's all I have. I'm active on all these channels, right, during the day. For other details, you can check out. If you want to subscribe, if you like it, you can do that. You can comment and share to friends and colleagues and all that. Right, that's all I have. Thanks for watching. Happy trading, happy learning. Bye bye.